All right. Good morning, everybody. Happy Wednesday. Here we're opting for a little bit of a Christmas theme this morning, but I hope everybody's having a fine day. I got to get a console or something to get all those chords together. But in the meantime, we're here focused on what the stock market has for us. So that's what we're going to be focusing on. That's what we're going to be diving into today. This is the day. This is the day that we have been waiting on, right? We've got Powell today. We've got the FOMC minutes today. So we've got a lot of different things that are happening today that are really the fulcrum of the week. We talked about this on Monday, and that's allowed us to maintain our expectations coming into today with regard to, what we're expecting out of the week. So I'm excited to kind of get into that today because today is the most important day of the week with whatever Powell has to say. And then also with whatever the FOMC rates decision, right, interest rates decision ends up being. So I'm here. I'm excited. Today is my brother's birthday, so I'm excited to celebrate him later, go to dinner, hang out with the family, and to just make today a great day. So we've gotten some chops, some continued bleed up, and that's caused some stress in terms of like kind of figuring out, okay, what positions can you work short term and what can you work long term? Based off of the experiences this week, going and adding more time on the contracts is definitely the key over shorter time on contracts, right? Just because, again, with what we have going on with interest rate decisions, you can end up getting some of that chop. So it's important to make sure that you're going through, taking inventory of your experiences and adjusting as you go on. Banks have been something that have run pretty steadily and nicely for us with MasterCard coming through quite nicely. AMD still on a run after breaking that downtrend last week and us making some nice money off AMD after we retraced that downtrend break. AMD still pushing here this week. So we'll see, kind of what the market has set up. But a lot of, kind of hammer candles and reversal candles that were put in over the course of the past 2 days, signifying that we can push higher. And that'll actually push us directly into our top news, which is Fed Watch. But make sure whether you're watching live or via replay, you comment a 1 in the chat, setting your intention to get 1% better. That's all we're looking to do each and every day, even if no one else does it, right? Even if it's just you, look to go to sleep better than the way you woke up, right? Even if it's just 1%, that will compound over time and that'll make you the best person you can be when heading into 2024. Now, in terms of top news, Fed Watch. Someday, the Federal Reserve's monetary policy decisions may once again be like watching paint dry. We're not there yet. To be sure, very few see any chance that the Federal Open Market Committee will change the federal funds rate target range from its current 5.25 to 5.5% level at the end of its meeting on Wednesday. Market participants will focus on when the Fed will start cutting rates and will look for clues in the policymakers' dot plot and in Chair Jerome Powell's language during his press conference. In terms of market expectations, in September's summary of economic projections, the median projection for the Fed funds rate was 5.1% at the end of 2024, implying one rate cut. Wells Fargo Investment Institute's Brian Rayling pointed out in a recent note that markets are expecting 4 to 5 25 basis point rate cuts in 2024, a significant disconnect from the Fed's last SEP. Quote, therefore, in our view, either market expectations or Fed policy messaging will have to adjust in the future, he wrote. That's important to note because right now that means that there's a big mismatch in terms of expectations of people and what the Fed has said thus far. So either the Fed is going to have to change their tune, and if they don't, people need to adjust their expectations because right now people are expecting multiple rate cuts in 2024, right? And that's not what the Fed is telegraphing is going to occur, right? So one of these two things has to break, but that is what allows for big moves in the market when there's a mismatch between what's going to happen and then expectations. That's not to say that, the Fed hasn't lied before because they have. They might plan on cutting multiple times, but I think that they know exactly what a lot of other wealthy people know at this point, which is as soon as they cut interest rates, inflation is going to skyrocket back up. Pent-up demand is going to overflow. People are going to buy all those houses they've been waiting on. It's going to push prices right back up. Right. And then all of what we did for the past year and a half was for nothing. So I think the Fed is aware of that. And if Powell is smart, he'll hold steady. Maybe they'll do one cut. But again, unfortunately, it's got to be a long, slow choke on the American consumer because we're still finding ways to spend money. Right. We're still finding ways to be out there and purchase things and keep prices high. And that's where we're at. Despite the fact that inflation has dropped, it hasn't dropped to our target rate, nowhere close. A lot of people say that we need to adopt a new target rate. I have no idea. But at the end of the day, this disconnect is what's important to keep an eye on, because right now people are expecting the world out of 2024 when it comes to rate drops. I mean, everyone in the real estate, in the commercial real estate, right? In all these different sectors, they are banking on a drop in interest rates. So we'll see if that happens. But if that does not happen, we could start to see, some ramifications start to unfold, because right now that's what a lot of people are promising investors and what they're hoping and praying for. Now, David Russell, a global head of market strategy at TradeStation, will be listening for a change in language to see how confident the FOMC is regarding its control of inflation. Quote, we'll know we have a soft landing when the Fed believes inflation is done and gives a sense that they are no longer wanting to be restrictive, he said in an interview. He had expected a Q1 rate cut, but after Tuesday's CPI print showing an increase in used vehicle and housing prices, he said, quote, a March rate cut may now require more substantial slowing in the real economy and labor market. Now, in terms of Seeking Alpha commentary, Seeking Alpha analyst Logan Kane warned that the Fed may throw traders a curveball. Quote, given where inflation is now, the Fed may be willing to hold rates steady for all of 2024 or even consider hiking if inflation doesn't cooperate. Traders likely would not like to hear this. Investing group leader Lawrence Fuller also cautioned traders, saying, quote, the consensus of investors sees short-term rates closer to 4.1%, and this is where the Fed may intentionally disappoint to cap the rally that is rapidly loosening financial conditions. That's really the big point here, is that they're trying to not get you too optimistic. It's like when you're on a trip and you're like, hey, mom, dad, like, can we stop? And, you might want to stop and get McDonald's, but you end up stopping and you just get snacks from a gas station, right? It's one of those things where it's like they probably want to cap expectations because they know that we'll run wild if we get enough leash. So we can theorize and sit around and, kind of talk back and forth about what we expect, what it could be, this, that, and the third. At the end of the day, all that matters is what ends up coming out of Powell's mouth today at 2:30. Right, and what decision we get from the Fed at 2 p.m. So the biggest thing is going to be 2:30 when Powell comes out. A lot of times, again, when we talk about movement that we get going into these events, typically it is, we can get some type of push in the morning and chop in the afternoon, or we can just get chop all day. But a lot of times we get that morning push so that they can get people into positions, and then they get in those positions until, FOMC minutes and until Powell, and then that's when we get the volatility. So that's the same thing that can happen today. Be aware of that, right? And if you don't want to kind of hold through that decision, just make sure you get rid of it before it's that time. It's all according to your risk rules, right? To your risk tolerance. Personally, that varies from person to person. Now, in terms of energy news, COP28 deal. Nearly 200 countries at the COP28 Climate Summit in Dubai have agreed to transition away from fossil fuels in a first-of-its-kind deal that will likely usher in the end of the fossil fuel era. That's very lofty talk right now for a world that is still heavily dependent on them. The deal has to be revised after the initial draft faced opposition from some countries, as it didn't include strong enough wording on phasing out fossil fuels. The new pact also calls for tripling renewable energy capacity globally by 2030 and substantially reducing methane emissions. Quote, we're standing here in an oil country, surrounded by oil countries, and we made the decision to move away from oil and gas, said Danish Minister for Climate and Energy Dan Jorgensen on the historic agreement. In terms of economic news, inflation gauge, the consumer price index, edged up 0.1% in November, exceeding the 0.0% rate expected, according to the Department of Labor. Sliding gasoline prices helped keep the headline number in check. We talked about this, offsetting gains in shelter, food, and medical care. Let me see here. So I'll write down a note. All right. Cool. Have these ideas that come to mind, and I just got to make sure I take them down, because sometimes I've got a goldfish memory. But that's something we talked about, right? How Biden is using oil and not refilling the petroleum reserve, the strategic petroleum reserve, in order to keep inflation low. Hopefully have the Fed cut rates, and then the market turn around and things turn around, because it's an election year, right? Going into election year is going to do anything possible to make our lives easiest so that we can remember him in a rosy light when we enter the polls in November. Let's see. Core CPI, which excludes food and energy, rose 0.3% month over month and 4% year over year as expected. Markets embraced 3.1% CPI increase, which matched expectations, said investing group leader Chris Lau, as all three major indices ended in the green. Rate expectations were largely unchanged, with most economists still expecting the first rate cut to happen in May. Seeking Alpha analyst Lawrence Fuller believes the CPI data signals the war against inflation is over. There you go. Well, Lawrence Fuller, we'll see if that ends up reigning true. In terms of AI news here, which has become a stout fixture of our pre-market prep sessions nowadays, powering AI, Microsoft is training generative artificial intelligence to help speed up regulatory approvals for nuclear power, which can take years and cost hundreds of millions of dollars. The software giant foresees a massive need for electricity as it pushes deeper into supercomputing and AI. The nuclear power is seen as a way to provide electricity more consistently than renewables. In other news, Microsoft's AI model Phi-2 is now capable of outperforming rival models from Meta platforms and others. With only 2.7 billion parameters, Phi-2 surpasses the performance of Mistral and Llama 2 models at 7 billion and 13 billion parameters on various aggregated benchmarks, says Microsoft. You got to own Microsoft. I mean, absolutely a powerhouse of a company. In terms of today's markets, looking mostly green, but kind of marginal green here. Today's economic calendar, the biggest thing is going to be FOMC announcement at 2 p.m. That's the biggest thing. And then we've got Powell at 2:30 p.m., right? Those two things are going to be really what represents the crux of price action movement today. And then after we get those things, kind of looking to see the market move one way or another with some conviction here, but it'll be nice to kind of get away from some of this chop we've been seeing, even though it's been upward chop, right? Some of this chop that we've been seeing here in a lot of tickers. It's not fun when you open lower, you edge higher, you open lower, you edge higher. It ends up just being like kind of, and it's tough to really work with anything that isn't just straight up long-term, like minimum 2 weeks, 3 weeks out, which is something that we've been finding, right? Just throughout operating this week. What else is happening? Elon Musk's SpaceX valuation is likely closer to 180 billion. U.S. federal budget shortfall balloons to 314 billion in November. Walgreens, ticker WBA, gains as it restarts talks on potential Boots sale. Apple offers rivals access to tap and go tech in EU antitrust case. Disney, Reliance, near deal to merge Indian media operations. Diabetes patients facing insurance hurdles getting GLP-1 drugs. L3 Harris, ticker LHX, to halt merger and acquisition activity for now to bolster balance sheet. And the McDonald's struck gold with Chipotle. Will Cosmics blow up? Now, in terms of a new data set, Netflix reveals what we watched and for how long. And then Target, ticker TGT, is Goldman's retail top pick for 2024. And then they have some other buy ideas. But that'll wrap us up this morning here. Hump day, right? Hump day, this fine Wednesday. We've got a lot of stuff going on with Powell, but that's why being patient is important. Again, some observations that we've come across over the course of the past 2 weeks. Opting for more time is better than opting for less time. When you get this chop, when you get these things that go on and that data starts to wear out, you want to say, okay, cool. I need to make sure that I'm getting more time on what I do, right? And learning from those experiences. You either win or you learn. You don't lose until you quit. And that's the most important thing about markets and everything else, right? You say, okay, cool. This worked. This didn't work, right? Because again, every week there's new things going on in the market, right? There's new expectations. There's new conferences. There's new dynamics at play. There might be a new war. There might be a de-escalation, a re-escalation, all these different things happening, right? So what you have to do is say, okay, based off of how these things have behaved, this is how I'm going to adjust, right? And then you move on from there. And that's the important thing. We're always growing, always learning, always evolving, just like Microsoft and the 10,000 AI systems that it has going on here. But as always, right, if you appreciate this content here, just make sure you show love to it right over on Instagram. We'll have reels up there today. Show love, and just in life, show love. It's the holidays. It's a tough time for a lot of people trying to get in the spirit here, right? You see the hat, you see all this stuff. So we'll see, see how everything goes. We'll see what Powell has to say, and we'll break things down from there. But show love is a tough time of year for a lot of people. And really that's the only thing you have to give. Forget gifts. Don't get stressed out about gifts. At the end of the day, if they love you, they'll accept no gift. They'll accept a hug, right? It is what it is. You got to put food on the table. So don't put pressure on yourself. A lot of us put pressure on ourselves during the holidays also. Don't put pressure on yourself. because there's no reason to, right? You don't want to put yourself in debt or anything else heading into the new year. Live a good life, be happy about it, hug your family, have a great time. And other than that, guys, I'll see you back here tomorrow morning for our next pre-market prep session of the week. Have a good one. Peace.